clear and present danger. That's our top story today on the Wall Report. I'm your host, Greta Wall. That quote is from the chief economist at the International Monetary Fund, which slashed its global growth forecast today, citing the war in Ukraine. The group now expects global GDP growth of 3.6% this year and next. That's down 0.8% from the previous 2022 forecast. And the IMF's chief economist said global economic prospects have been severely set back, largely because of Russia's invasion of Ukraine. And the group also raised its global inflation forecast. The IMF now expects inflation of 5.7% in advanced economies this year and 8.7% in emerging market and developing economies. That's up 1.8% and 2.8% respectively from the previous forecast. And Treasury yields are continuing to surge as the market is still focused on inflation. The 10-year Treasury yield is up 5 basis points to 2.92% today. And that's the highest level in more than 3 years, as 91% of traders now expect the Fed to enact a 0.5% rate hike at their May 4th meeting. But the spread between the 2-year and the 10-year Treasury yield does remain positive after that yield curve inverted earlier this year. The 2-year yield is up 7 basis points today to 2.54%. Oil prices, meantime, are tumbling amid new demand concerns prompted by that IMF downgrade. West Texas Intermediate crude futures are down more than 4% to under $104 per barrel, while Brent crude futures are also down more than 4%, falling under $109 per barrel. The drop comes as fears of lower demand are outweighing new production disruptions in Libya. In the economic data of the day today, U.S. home building was stronger than expected last month, even as mortgage rates continued to surge. The Census Bureau reporting housing starts rose 0.3% in March to a seasonally adjusted annualized rate of 1.79 million units, but that growth was centered in multifamily units. Single-family starts fell 1.7% last month, while multifamily starts jumped 7.5%. And housing starts were 4% higher year over year. Now, the strength in building is expected to continue as the number of permits approved for future projects also rose more than expected. Permits were up 0.4% last month to a seasonally adjusted annualized rate of 1.87 million units. Single-family permits, though, fell 4.8%, while multifamily permits surged 10.9%. Now, in earnings news today, Johnson & Johnson shares are rising after beating Q1 profit expectations and lowering its full-year guidance. The pharmaceutical giant reported earnings of $2.67 per share on $23.4 billion in revenue. That beat analyst earnings expectations, but revenue did come in short. The company said it sold $457 million worth of its COVID vaccine globally last quarter. But J&J is now no longer providing specific guidance for COVID vaccine sales or breaking those sales out from their overall revenue going forward. The company lowered its 2022 sales forecast by about $1 billion and lowered its earnings forecast by about 25 cents per share. Hasbro shares are also rallying today after beating Q1 sales expectations and hiking its outlook. The toy maker reported adjusted earnings. We'll get to that in just a second, but here's a look at the stock rising. The toy maker, though, reported adjusted earnings of 57 cents per share on $1.16 billion in revenue. That missed analyst profit expectations, but beat on revenue. Hasbro did warn Russia's invasion of Ukraine will cost it about $100 million in revenue this year. The company forecast fiscal 2022 profit growth in the mid-single digits, up from its previous guidance for growth in the low single digits. And now all eyes are on Netflix. The streaming giant's shares are rising today as the company prepares to report earnings after the close this afternoon. The company will be the first of the FANG stocks to report this earnings season. Netflix had a weak Q1 forecast in its latest earnings report, projecting just 2.5 million net new subscribers. Analysts have that pegged around 2.8 million ahead of the release today. The company also forecast revenue just under $8 billion the last quarter. Now, the market will be focused on Netflix's outlook for Q2, the current quarter, which has historically been the company's weakest each year. So what are you expecting from Netflix today? Do you think it will be another bad quarter as the company faces increased competition from other streaming platforms? Let me know in the comments, and be sure you're subscribed to my Coffee with Greta morning newsletter to get the details ahead of the market open tomorrow morning. And I'll see you all back here for the Wall Report tomorrow at noon. Hit that subscribe button and then ring the notifications bell before you go.